This is the Harness Money Report, a show designed to help anyone become a better investor. Every week, your host will break down a stock from beginning to end, the management, products, revenue, future, and so much more, all leading to the final stock verdict. Are you a bull or are you a bear? This show is for information and education only. Please do your own research before making any financial decisions. Thank you for being here, and now here is your host, Colin. Welcome to the Harness Money Report. My name is Colin, and I have a wonderful show planned for you today. And every single week, I try to take one company and do a full breakdown of that company, the management, the products, and of course, the stock, and whether or not I think it is a good buy or just my analysis of whether or not I would consider this on my watch list. So today I have a really great company to go over with you, and that is Floor Decor. And I chose this company because number one, it is part of the construction industry, and that seems to be really in demand right now. The demand for housing is very high in the United States, if not the developed world. So this is part of that ecosystem, but I also found it very interesting because Warren Buffett has been an investor in this stock. So I really wanted to dive deep into this stock and figure out, is there something there that makes this stock unique, that makes it a buy, or is it something that I would like to avoid? So let's go ahead right now and jump into this. So the ticker symbol for Floor & Decor is FND. And right now the stock price is around $80 a share, and it is headquartered in Atlanta, Georgia. So this really began as a family-owned business in Georgia, and it has stayed there ever since, but they've expanded into other states. So what exactly is Floor & Decor? Well, you can pretty much guess what it is from the name. It is a leading specialty retailer in the hard surface flooring market operating in the United States. And they also offer other home goods like decor and rugs and things like that. But they're really primarily focused on flooring. They offer a broad selection of tile, wood, laminate, stone, and other flooring accessories. So that is the primary business that they are in, and they operate through their website, their warehouses, and their showrooms. Their showrooms, I believe, were somewhat of an experiment in that they added these showrooms just in order to get into communities, probably to get into maybe higher end communities where they didn't have enough space to put a warehouse, but they wanted to have a presence in these higher end communities that might be a little bit smaller and dense cities. So that is that. Number of employees. They have around 12,000 employees in total. So not too bad with the size of the employees. That's not huge for a retailer. And how does the company make money? Well, the company makes money by selling physical flooring products along with other accessories. I mentioned decor. They also do bathroom accessories, so vanities, fixtures, faucets, all that good stuff. But then beyond just selling products, they do design services, credit financing, and then professional services, which I think could be a part of their future growth. So there's a couple different ways that they actually earn revenue, but the primary major way that they make money is by selling their product to end consumers, to people, to actual home buyers or home owners, as well as to those professionals that might be building homes or maybe installing flooring for homeowners. So who is the target customer? Well, I just talked about them. The two primary customers for this business are the individuals who are buying or owning a home, and then the professionals, so home builders, contractors, or other commercial businesses that may be buying inventory from Floor & Decor. So those are their core. I kind of like that their customer is not super broad, that they're not trying to get everybody into the store. They're not trying to really, they're not trying to be Walmart. They're not trying to sell everything that Home Depot does or other businesses. They're really laser focused on the products that they are selling. which is flooring. So Floor Decor was founded as a family business in 2000 by George West in Atlanta, Georgia. And Floor Decor is really a family business, but George had a business, another construction business before that called West Building Materials. So uh, this family has been in the construction business for a while. And I think being in the southeastern section of the United States is probably a good thing for the business overall, just because it seems like the trends, the demographic trends, the population movement is going in that direction. It's going to Florida, North and South Carolina, Georgia. Just people are moving away from the large cities, Chicago, New Jersey, New York, and going towards the Southeast United States and Southwest United States, like Texas. So I think population trends will probably help this business overall, but it's just good. It's just probably luck that that's where it started. So Mr. West began his career starting a successful retail glassware business in Atlanta, Georgia, and construction business. So began as a building materials, and they operated in 5 southeastern states. And eventually, Mr. West also developed and sold a multi-state billboard company and developed several real estate projects across the state of Georgia. So it definitely seems like this family was in business. They were in construction. They already had some other successful business in real estate, all relating to real estate. So that gives me confidence in this business, in the business model, that maybe this wasn't launching Floor & Decor onto more of a national stage, onto the stock market. It wasn't the first foray into business for this family. And so that probably gave them a little bit more of an education on how to grow a business and make it successful from consumer side, but also from the financial side, which is important for a stock. So in the 5 years between 2011 and 2016, the company doubled in size and revenues, going from $277 million in 2011 to $772 million in 2016. And then the business went public on the New York Stock Exchange on April 27th, 2017. So they have been public now for 8 years now. And so that's a good amount of time for a stock to be on the stock market. But also, I like that it's not a tech company, or that it's not a fast, they're not trying to dump everything into the market. They're not trying to grow at lightning fast speed. It seems like they're being methodical and trying to make each step in their business evolution successful before they really grow into a behemoth of a company, which I really do think they are a behemoth of a company at this point. So one of the things that sets Floor & Decor apart, there's a lot of building material stores out there, and all across the country, in every major city, Atlanta, in Miami, Orlando, in Texas, in Dallas, or whatever city you go to, there's different independent building stores. So you've got Home Depot, you've got stores that might supply stone, might supply flooring, that will supply the materials that are needed to build homes or build housing in that state. But one of the things that I found that sets this particular business apart is generally those building material stores. Number one, they focus on all the different materials a lot of times. So tile for bathrooms, they might do hardwood flooring, but they also might do bathtubs, appliances. They might do lumber for the framing of a home. But I kind of like that Floor & Decor is laser focused on specifically flooring, and that they are large and trying to be the biggest supplier or the biggest retailer of that environment. So what do I mean by that? Particularly that their warehouses are 1.4 million square feet, or warehouse distribution centers in many different places around the country. So in 2018, they built a new one that was 1.5 million square feet in size, and it sat on 90 acres in Bloomington, Georgia, just south of the port of Savannah. And in 2018, they expected to do $160 million expansion of the company that will include 17 new locations, a possible headquarters in Atlanta, and nearly $30 million in improving its e-commerce and technology infrastructure. So what I like about this is that sets this business apart is the size of the distribution centers. So they're going across the country and building these massive distribution centers. And like I mentioned, they're focused on flooring. So they're trying to have a very wide variety. They're trying to have the most variety of their product that is available on the market. So that makes me think, if you're going to go for flooring, you can go to Home Depot. There's probably one in your area, but you're only going to have a limited selection of what they have in stock in their stores or maybe on their website. Now, Home Depot has been more methodical recently in the 2020s of trying to break more into the commercial building aspect of construction. So Home Depot for the longest time was focused on the consumer. How can they provide consumer products for the home, for people remodeling their homes? But more recently, they've tried to buy and provide materials, building materials for the other side, the commercial side, or the home builders, the home contractors that are out there. So that ties in with Floor Decor, because Floor Decor is really trying to do a similar strategy. That in the beginning they were really focused on the consumer, and now they're really focusing on both the consumer and giving the products to the home builders. And that will probably serve them well in the upcoming years, because we keep hearing about housing shortage, that right now the demand for housing is outpacing the actual housing that is available on the market. And that doesn't look like it's going to go down anytime soon, especially as you just look at the news with immigration coming from all over the world, from Asia, from Central America, from maybe Africa or the Middle East. People are still coming to America, and they still need places to live. All of those people need places to live and are going to need more housing than we currently have available. So I think the trend of building homes, home builders, it's going to be profitable for the foreseeable future. And then, of course, we still have a ton of homes in the United States that are getting older, that every single year they get a little bit older and a little bit older, and they need to be remodeled. They need to be updated. And so I think there's still a large portion of homes that will need Floor & Decor's product. So as of 2021, the company operated 160 warehouse format stores and 2 small format standalone design centers in 33 states. And then they also have their online platform, which carries over 1 million square feet of in-stock flooring and free design services. So I really think that they have the scope covered that of the actual products. So now let's actually talk about the actual products that they have in stores. So of course it's primarily around flooring. So the flooring consists of vinyl, laminate, hardwood, tile, which includes porcelain, glass, ceramic, and then you have stone, which is marble, travertine, slate, and they also have carpet and some other types of flooring in there. Then they also sell moldings and trim. They sell bathroom accessories, which is vanities, fixtures, lighting, shower doors, mirrors, and then they also provide installation materials. So grouting, trowels, cleaners, sealers, caulking, all that is included, or they sell those particular materials for professionals, and that is all included in their pro services. So you can have a pro services account with the business. So I did not find any acquisitions. No acquisitions could I find during my research. Now, they may have done some acquisitions, but it really seems like they've tried to grow organically and create their own value without buying other companies, which can really be there's always a debate out in the community between the management of businesses and the shareholders, which managers of businesses like to do acquisitions. It seems a lot of businesses like to do acquisitions because you're acquiring another business, so you don't have to recreate the wheel. If you are in Google and you don't have a customer relations management software, you can go out and buy HubSpot, and then you immediately get clients, you immediately get software, you immediately get the talent. But a lot of times shareholders do not like acquisitions because they believe, because a lot of times it's finance, the acquisitions are financed with stock, or they just don't believe that the value of paying a premium for a business is worth paying up for an acquisition. So I kind of like that this business doesn't have any recorded acquisitions. And even if a business does make acquisitions, maybe if they do it, I like them to be small. I like them to be in cash if they can pay cash. Again, I think one of the reasons Buffett has been so successful in his career is partly because most of his acquisitions have been pretty much all cash. He pays cash for the businesses that he acquires and folds into the company. If you're paying in stock like Salesforce does, it makes me less excited about owning that stock as a shareholder. All right, let's talk about management. So the manager is Thomas V. Taylor, and not too bad. So in 2023, the total compensation was $6,200,000, which is not crazy. It's not. It's commensurate with the size of the business. So this business isn't ginormous. It's not a huge business value-wise. So I wouldn't expect this business to be paying $20 million like Netflix is, or a much larger business. But 6.2, that's not too bad. I don't see any issue with that, and that's up from 5.1 million. Oh, and I should also mention that compensation, 3.6 of that compensation was in equity. So I like to see that the compensation is in equity. That way that the management has more incentive to stick with the stock and make it grow over time. So President Trevor Lang, Chief Financial Officer Brian Langley, and then there's several different people in their management. I like that it's focused on, it seems like a Midwestern or just a non-tech business where they have a chief financial officer, business development strategist, secretary and general counsel, store operations, and merchandising vice president. So a lot of kind of retail and more traditional titles rather than some of the newer, more fancy ones that are involved with technology companies. So board of directors, the chairman of the board is Norman H. Axelrod, and vice chairman of the board is George Vincent West. So I like that Mr. West is still involved in the direction of the company. The board is there to guide the company, to set the direction of the business and make sure that the business stays on track. So I like to see that he is still involved, that he still has his hand on the direction that the business is going into the future. So as well as the Mr. Taylor, the CEO, is also on the board. So I like that they're working in concert together. So currently they have 11 directors on the board of directors. So not too bad. It's not huge. So I don't see any problem with that. And no one's egregiously paid either. So the total board compensation is around $2 million a year. So not too bad. The industry, we've already really talked about what industry it is, but it's in the home building, home improvement, and retail industry. So it's in those particular, it's competing, it's the competition. Let's talk about the competition is with the traditional players in the business. So the competition for this particular business is going to be your traditional players: Home Depot, Lowe's, Amazon, Walmart, Costco. Essentially any business that sells flooring material is going to be a competitor for this particular business. So I really look at Lowe's and Home Depot. I would say the direct competition is Lowe's and Home Depot are going to be their biggest because they're the most prolific. But then beyond that is just the independent local building supply building supply stores. What is it? Builders First Source is another one that is a supplier of materials. So any business that supplies materials to home builders as well as consumers will be looked at as direct competition for this particular business. Now, the thing about going to Home Depot, the reason it's not completely direct competition is because Home Depot and Lowe's, yes, you can absolutely buy your flooring from them, but they're not going to have nearly the amount of selection that Floor Decor has in their warehouse or in their supply chain, just because they're selling a lot of other things. They're selling power tools, they're selling outdoor materials, bathroom, lumber. A huge section of Home Depot and Lowe's is dedicated to lumber, so they're not going to have nearly as much options as Floor & Decor, but they're more prolific. They have more stores around the country than Floor & Decor has. So if you're maybe in more of a rural area or not as close to a major metropolis, you might not have a Floor & Decor that is near you. So just something to consider with competition. Next, the other competition that I had on here was Amazon, Walmart, Costco, and other online providers. Now, Amazon, Walmart, and Costco, they're not particularly focused on building materials, construction materials. Specifically, Amazon and Walmart does have a good amount in their stores that I've seen, but Amazon, not great at doing home renovation products. So I consider them indirect competition just because, yes, they do have some flooring options, but they're extremely limited. And if you're really remodeling your home, you're probably not going to Costco for the materials. So, and then the other biggest competition is just locally owned hardware stores. Like I mentioned before, you go across the country, there's locally owned building supply stores that are in local communities that people are familiar with, people are more likely to just do a Google search and go to that store just because it's local, and they may know someone running it, or they may have contact with another contractor that likes to use that specific location. So that's probably another direct competitor for this business. So what is their moat, if they have a moat? And I really think that there's a couple things that are a moat for this business. Number one is their physical locations. So they're in 33 states throughout the United States. So pretty much they have a wide variety of physical locations, large physical locations. So when they have a location, it's not just a one small store. It's going to be a large distribution place, a place you can go and find all the different products that they have to offer. So that really, to me, is their moat, is that they're specifically focused on this one category of products, and that they have as many different varieties of product as possible. So the other thing that gives them a moat is when you have that many products, that means you have your business buyer has a lot of different supplier connections. So they're probably going out and trying to make as many buyer connections as possible for the materials, for the actual source. Maybe that's marble, or maybe that's slate, or that's carpeting, whatever it is. They're going to try and form these relationships, and those relationships can be a moat. That's what makes MasterCard and Visa so difficult to displace, is that they have all the connections to all the banks around the world. So same for this business. They're forming those relationships with those suppliers, and then they're buying in bulk. They're buying a lot of product from these suppliers. So those suppliers will want to do business with Floor & Decor so that they can sell in bigger and bigger quantities. So I really just think it's the scale, as well as the supplier relationships, as well as that connected to their online. So one of the reasons Home Depot and Lowe's has been so successful is that because online retailers, it's hard to ship a lot of building slash construction materials through all of them, through Amazon, through UPS, through FedEx. Shipping a bag of concrete or a like 8x10 piece of lumber is not really, that's just not a very good thing to ship because it's expensive. It's expensive to ship heavy and large and different shaped objects like that. So if you have distribution centers around the country, and then you can have trucks connected to those distribution centers that are specifically focused on delivering these larger, bulkier, pallet-sized products, then you have an advantage over the other shipping companies or the other retailers that are trying to ship smaller, more electronic devices. Amazon wants to ship you Tide, or they want to ship you a mouse for your computer because they're much smaller. And it's much easier to put that on a truck and send that to consumers. It's much more difficult to do a pallet, a slate, and send that to your home. So having the scale is really what allows a person to connect to that business online and then buy online and have that shipped to their home. So there's a kind of a synthesis between all the physical locations, the online, and the shipping that can really give a moat for this particular business. So there's that to keep in mind. All right, now let's get to the good stuff. I know you want to know all about the stock. What are my thoughts on this stock? We've talked about enough about the business, what it actually does, what their moat is. Let's talk about the stock. So who owns this business? Who owns the lion's share of this business? And it's pretty much institutions. Institutions own the majority of voting shares. So the founder, Mr. West, currently owns around 568,000 shares, and he is the largest individual shareholder. So I do like to see that he's still the largest individual shareholder because that means he's still involved. His hand is still guiding this business, and he's going to want it to be successful and grow into the future. The other thing about this business is we'll discuss in a minute is the dividend. They don't pay a dividend. So his 586,000 shares, they need to grow in share price. That's the only way you get more benefit from owning those shares, is if it increases in value over time. So I like to see that he's still involved. Total shares outstanding is 106,700,000. Yearly shares issued, new shares issued is about 600,000, and the float is around 100 million. So 100 million is 106 million shares outstanding. It's not crazy. That's actually not too bad. If you go to some of the much larger businesses out there, Bank of America, some of the banks, the technology, they have way, way more shares outstanding. So I would not be surprised if eventually in the near future, they start buying back more stock and that share count starts to go down, even though they're issuing 600,000 new, maybe for compensation to their employees or management or whoever. I bet you they're going to start buying back more and the share count will start decreasing at some point. So institutions own 98% of this business. So heavily institution controlled. Insider ownership is 1.6%. The top funds holding this stock are the AMCAP fund, which I've never heard of before, but they own 5 million shares. Growth Fund of America is traditional. T. Rowe Price, Small Cap World, VTI, Vanguard Total Stock Market, Vanguard Small Cap. So you can see this business is a small cap business at the moment. I would say small to medium cap. They're growing, so but they're not large cap. They haven't reached 50 billion or 100 billion of that. So capital total in top institutional holders: Capital World Investors, T. Rowe Price, BlackRock, Vanguard, Berkshire. Berkshire owns 4.7 million shares. So I like to see that. WCM Investment Management, Morgan Stanley, Lone Pine Capital. And does the business pay employees in stock options, RSUs? Yes, they do. So top institutional holders, let's talk about Buffett now, or let's talk about Berkshire Hathaway owning this stock. That definitely gives me encouragement that they've owned. Berkshire bought into this business, and they have never sold out of this business, or they haven't really trimmed their position. So they just bought in and stayed at this position. My question is whether or not you never really know. Well, sometimes Berkshire buys into it, and it's not Buffett. It may be his lieutenants that buy this stock. I think they do run everything by Buffett and maybe convince him to buy things. But sometimes you don't know if Buffett's the one pulling the trigger on something, or if it was an idea from his lieutenants that they pushed to Buffett. And some of the decisions Buffett has made to invest into stocks, I don't understand, or sometimes he trades into stocks and then trades out of stocks. Sometimes he buys stocks and holds them forever, like Coca-Cola. And then sometimes he doesn't. Sometimes he decides that it was a one-time purchase, or it was he thought something was undervalued. He bought into it, and then it turns on him and he buys out of it. He sells it off. So it's definitely encouraging that he's bought and held, and it's definitely a good sign for the future of the business. But I wouldn't put all my eggs into this one basket of trying to follow Berkshire. It's just a signal that this is a vote of confidence for this business. He probably also Berkshire Hathaway also has a tendency. He's always kind of shied away from technology stocks, from high growth stocks like Salesforce or Adobe or Google, those type of stocks. So this seems to be a little bit more in his wheelhouse. It's a retailer. It's a little bit smaller. They do a specialty product. He can evaluate the inventory on the balance sheet or in the financial statements of the business. So it's probably a little bit easier for Berkshire to value how much this business is worth on paper, and then determining that this business might be undervalued. That's the other thing. Berkshire is really they look for undervalued stocks to buy into and hold till they increase in value. So, right now the the market cap of this business is about $13 billion. So 114 per share. The all-time high of this stock is $130 per share, and that was in 09 of 2021 that this business hit this price. So if you're interested in a chart and the full show notes of my show, you can find them on the Harness Money Substack. I have all of the businesses that I have evaluated and done research and written up are on the Harness Money Substack. So go there, subscribe, and you can get all of my research that I'm doing on these companies. So every single week, I try to add another company to my database of research that I'm doing on companies. So go there. Does this business pay a dividend? I already mentioned, no, this business does not pay a dividend. And does it buy back any stock? No, it does not buy back stock at this time. So the only way, if you're an investor, is you can trade stock options on it to make income. But if you're just buying the stock, you're purely holding the stock for it to increase in value over time. So I could see that changing though, as they're already profitable. So as their profit margin grows, their revenue grows, they start to earn more net income. I could see them really start to buy back stock and try to juice the stock price, grow it a little bit more than it is right now. All right, let's get to the good stuff, the numbers. I always like to look at the numbers because it's not about just, is this business making money or losing money? It's when you look at a share price, I like to look at a stock's share price and like to know how much revenue are they earning based on their market cap and based on what the share price of the stock is right now. So the more financial statements that you can look at, the more companies that you can investigate, the more you can see the revenue. How much revenue is each business earning? And then you can keep a mental note of, is it earning $100 billion in revenue? Or is it earning $5 billion in revenue? And where does it fit along that scale? So as a company earns more revenue and more net income, it will increase in share price or in value. So it's good to get a baseline of, okay, what is a good revenue number? and how much should the market value that business? That also tells you whether or not a company is undervalued or overvalued based on how much revenue they're pulling in. So let's go through the revenue numbers. In 2023, they did $4.4 billion in revenue. In 2022, they did 4.2. In 2021, they did 3.4 billion. 2020, 2.4 billion, and in 2019, 2 billion. So in 5 years, let's see, 1, 2, 3, 4, 5. In 5 years, they have gone from 2 billion in revenue to 4.4 billion in revenue. So I like to see that. I like to see this business growing the revenue at a steady pace. That some businesses, if they're more mature, they're going to be lumpy. The revenue will be up and down. Like if you're looking at maybe McDonald's or Pepsi or some of those businesses, the revenue will be lumpy because they're very large businesses dealing with macroeconomics. But for a business like this, 4.4 billion in sales, they are opening new stores methodically and really going on a ramp to get to scale and reach as many customers as possible, and just being good about slowly increasing their revenue. So revenue 100% domestic, no international stores at the moment. Again, I could probably see that changing in time. I don't think they're ever going to go international as far as maybe going over to Europe or going over to Asia, but I could see them someday maybe expanding into Canada or expanding into Mexico for new markets. I could see that happening. Expenses. So expenses have also been increasing. So 2023 was $1.5 billion in expenses. In 2022, 1.3. 2021, $1 billion in expenses. 2020 was 820 million. 2019 was 703. So I'm okay with expenses increasing if the revenue is outpacing the expense increase. So that's what I want to see, is because your expenses will go up if you're opening new stores. That's more maintenance on facilities. That's more construction to build those facilities, trucks, and then of course staff. If you're especially if you're a retail environment like Costco or Walmart, you need a big staff in order to operate those businesses. So your expenses are going to be increasing, and then hopefully you're paying your employees more salary over time. So I'm okay with that. Now let's get to the really good stuff. Always, when you're looking at financial statements, laser in and focus on the net income, because that's how much profit the business is generating. So in 2023, they did $246 million in net income. In 2022, it was $298 million. 2021 was 283. 2020 was 194, and 2019 was 150. So in 2022 to 2023, net income did slide a little bit. It went from basically 300 million down to 250 million in net income. And so I imagine that they probably opened more or they put more into expansion and growing the business that way. So there is such thing as you have to invest, especially with a retail store. There's a lot of times you have to invest a lot of money into these facilities before you can ever generate more returns. So it's like Amazon. If you're going to create Amazon AWS, Amazon Web Services, you're going to have to put a lot of money up front in order to get that business off the ground and make it really profitable. So similar, I feel the same way with this business. If you're really going to grow the footprint, you're going to have to invest in these large million square foot warehouses, which takes a lot of upfront capital. But they have a model that's you can replicate. It's been proven that they've been successful with those warehouses. So I'm okay having that reinvested into the business. So balance sheet. As of 2023, I'll just run through a little bit of these numbers. Total assets was $4.6 billion. Total inventory was $1.1 billion. Total liabilities was $2.7 billion. So total assets is much higher than total liabilities, which I like to see. So long-term debt is pretty low, $194 million in long-term debt. That's not too bad considering that they have 4.4 billion in revenue. So they're pretty solid on debt, I imagine. So, and let's go to the cash flow statement. Operating cash flow for this business is $800 million. Issuance of debt was $500 million. Free cash flow is $255 million. And then in repayment of debt, they did $731 million repayment of debt. So they really paid down a good chunk of debt in 2023. So also on my Substack, I have all these different ratios to break down the value of the business by specific ratio: earnings per share, price to earnings, price to sales. There's all kinds of, I record all the different ratios that I can, if you like to explore how a business stacks up with. Ratios are really good for comparing one business to the other or comparing one business to the industry. But again, I look at the ratios, the price to earnings, the earnings per share, but I take them with a grain of salt. I don't hang my hat on any one particular ratio. Price to earnings is probably one that a lot of people look at for, okay, is this business undervalued? Is this business overvalued compared to other businesses or compared to the share price? So whenever you're looking to buy into a stock, I really like to think of buying a stock in two different terms. Am I buying a stock? I ask myself, am I buying a stock for growth, or am I buying this stock for value? And it really depends. Or value or income. I kind of lump value and income in the same bucket as far as one certain set of stocks, and then growth as another set of stocks. So I am more of I break my portfolio really into two. I like to have one portfolio for growth and one portfolio for value / income. And the value / income, I really take big bets on. So I want them to be really undervalued if I'm going to put money into a value stock. If I'm going for growth, I'm okay if a stock is more expensive if I know that it's going to be growing at a bigger clip. Like Apple, Nvidia, Microsoft, those are all, to me, in my eyes, growth stocks. Even though they're massive, I understand they're trillion-dollar companies, but they also have a lot of they have huge revenues. Their revenues are so much larger than a Floor Decor. This, to me, would really be more of a value stock, which means a value stock, to me, means you're buying in low today and you're holding on for a lifetime, or you're holding on for decades before the value is ever extracted, before you want the stock to really run up and rise quickly. The growth stocks, you want them to be a little bit faster. You're thinking more 5 to 10 years, or even, let's say, 2 years to 5 years to 10 years. You really want that to be the hockey stick stock, versus the value stocks, in my opinion, are more slow burn. They're the ones that you want to buy in really cheap and then hold till they increase in value over time. So that's just some thoughts on how I think about buying into stocks. And then for another show, we can get into income. I like to really focus on stocks that can create income as an investor. So, all right, let's get to the final section of my show, which is the verdict. What is my verdict on this stock? So let's talk about potential success. What could go right for this business? And really, that this business continues to be laser focused on flooring products and increasing their physical retail footprint. So I think as this business opens new warehouses, new distribution centers, I even think they're like design showrooms. If they opened more of those, that's a good idea too. Not go crazy with the design showrooms. Don't open 1,000 showrooms, but maybe go across the country and pick major cities like San Francisco, Dallas, Atlanta, Miami, Charlotte, maybe Washington, D.C., and open it just a single 1 or 2 design showrooms so that people can go in and see the breadth of products. It's good for marketing of the business. But I really think if they can just continue to laser focus on opening these high quality distribution warehouses, then that will help grow their physical business, but also their online business. That will give their online store, their online connection, a larger footprint and a larger ability to deliver products. One of the things that we really didn't even talk about, which I also think is a potential success for this business, is the U.S. national housing shortage. I mentioned it earlier, but immigration is only increasing in the United States, or if it's not increasing, it's definitely not decreasing, or doesn't appear to be decreasing. It's still a good number of people coming into this country. People are having more children, and the population of the United States continues to increase its size, which means there will continue to be a demand for housing within the United States. So that to me is a headwind for this particular business that is just in the business of providing supplies for these new homes. And also, Floor Decor has focused on really building out or trying to offer that commercial business more so than they did in the past. So I feel like before they were more focused on the consumer, where now you can do credit financing, you can have a business account with them. So, and then you can even like rent some of the materials needed to install this product. So they also have installation services that they are connected with. So they're really trying to focus in on the construction aspect of this business, not just the sales or supply of the materials, but also the actual delivery of service for the housing industry. So as that continues to truck along and grow, then I think this business will be successful. And right now, we are in a high interest rate environment for Floor & Decor. So, and they've been able to succeed in this high interest rate environment. So over the next 5 to 10 years, I think as the interest rate drops and maybe more affordable housing is built in the United States, that will also be a headwind for this particular business. So I think really that's what can go right, is just the demand for housing continues to be strong. People continue to need their flooring services and they continue to grow their footprint. So let's talk about potential failure. Floor & Decor does have big competition. Home Depot and Lowe's, you cannot count them out. They have huge balance sheets and they're willing, if they laser focus in on a particular industry, then they are pretty much going to be successful. So when I say industry, I mean industry within the home construction environment. So if Home Depot decided that they wanted to offer a lot more flooring services, that would really be, I think, a yellow light for Floor & Decor. But on the other hand, it's like Floor & Decor has such a wide breadth of product that it's hard to compete. It's hard to knock them off as far as supplies. So I think as long as they have that huge footprint of warehouse and distribution center, that it's going to be really hard to knock them off. But the thing that has always kept me away from being an investor into the housing market, I've seen it for a long time. I've been around it. People in my family have worked in the construction industry, so you kind of see the ins and outs of that particular business, is that housing, construction, it can be cyclical. It does have its ups and downs. When it's in favor now, the interest rate turns or the consumer turns, and it's out of favor. You have 2008. 2008 is just the most acute example of the housing market going from gangbusters one moment to being completely out of favor the next. So there was really something that happened in the housing market that kind of destroyed demand for housing, and there was more net sellers of housing, then I think that could potentially hurt Floor & Decor. But even if you have a lot of real estate sellers, a lot of times they will try and fix up or make a home look nicer in order to sell that. So there could be that silver lining, but I just think that's always the reason I've stayed away from investing into the housing and airlines are like the two that I've always been kind of weary of investing into just because of the history of the market. So, what about any outside factors? The biggest outside factor that I can see is Berkshire Hathaway. If Buffett really sold out of all of it in just one quarter or something, if he quickly dumped all of his shares of this business, I think that would send a signal to the market that this business maybe not in trouble, maybe was not as great as business as people had thought. I don't know if it was in trouble, but it would definitely send a signal to the market about this particular stock. So, and of course, the other thing we already talked about was the housing market and housing interest rates. So my verdict is I like this business. I like that it's laser focused on a particular niche of the construction industry, and it's a retailer. They've got huge warehouses that they are laser focused on. And what I really like about this business is it's really hard to knock it off. For another business to come in and directly compete with this business, they would have to build really big distribution warehouses across the country. And I just don't see that happening. I'm not saying it couldn't happen. It definitely, a retailer could, but it would take a lot of capital. It would take a dedication and just a large amount of time. It's just a long time to really build large warehouses with these particular products, and to laser focus just on flooring is a very particular market. So I don't see another business coming in anytime soon to directly knock off or compete with this particular business. So I like it. It has a good moat. What I don't like about this business is flooring is the repeat customer aspect of the business. So with a business like Walmart or Amazon or a grocery store, you have a lot of repeat customers. Everybody's got to eat and continue to eat and buy food. So you're going to have a lot of customers going to Walmart and then going back to Walmart to buy their food. Now, that also increases the competition in those particular markets with those particular customers. But with Floor Decor, one of the things I don't like is that flooring is kind of a big one-time purchase. You're not going to be buying hardwood floors over and over and over again. Now, you might move homes. You might change from one home to the next. So you may be buying flooring 2 or 3 times, but as a consumer, you're not going to really be buying hardwood floors or stone multiple times in a single year. So there's less of the repeat customers to get in the door. Now, that may be a plus, because maybe if you're buying a one-time purchase, it's going to be a larger ticket item. You may pay $20,000 for some nice hardwood floors, and there's going to be more margin on those products than, let's say, going to buy Tide or going to buy chips at Walmart or whatever. So that could work in the favor of this business. So I also feel like that's built into the culture of, okay, we're not going to go and we're not going to stamp out 1,000 new stores in a single year or over 5 years. No, they're going to be methodical about building these bigger warehouses that have more selection, because our customers are also going to be more methodical about the choices that they make. So I like to see businesses that have a little bit more repeat customers, but it's not a killer of the stock. So I also like the fact that they sell a really big product like stone or hardwood floors. You can't just go into Walmart and get a pallet of stone and wheel it out to your car. No, you have to really be thoughtful about. You can at Home Depot, but even that, there's a limit to how much you can just put in your truck and drive off with. So that's why I think this business has really laser focused in on the consumer, or not the consumer, the commercial side of this business, is because those are the more repeat customers, people that may be flipping homes and people that may be building new homes. They're going to buy more often, and they're going to buy in bigger bulk than just a single consumer. So I really think that's a big part of the future of this business. So what do I really like about this stock? Right now, the stock is about $12 billion in value. So it's really pretty low. The stock really has a big room to run with their growth. So if they can continue to grow revenue at a steady clip in 10 years, like I mentioned, they're already growing revenue at a steady pace year after year. If they start to grow revenue, even increase that margin that they're doing, and then they start to buy back stock, I wouldn't be surprised if this company buys back stock and starts to pay a dividend, does both in, let's say, the next 10 years of life. So if you held this company for 10 years, I think it'll do well. Like $12 billion, that is small to medium cap stock. That's not $100 billion company or even close to $1 trillion company. I can see this business going from 12 to 20 to 30 to $40 billion in the future. So that is really what I like about this business. I would definitely consider this stock a value in the value camp. It's not going to be, I don't see it going on a tear, just dramatically increasing in value because just because of the nature of the products that they sell. So I'm definitely a bull on this product. And if I had to, on a scale of 1 to 10, if I had to give this a rating, I would give this a rating of a 7 because I think that they've made all the right decisions, that it's moving in the good direction. And I like the value right now. I like that it's not too expensive, that I can see a future where it doubles or triples in value. And that wouldn't be too much of a stretch for this business. So that's what I've got for you today. So thank you for watching this episode. And remember, make good money choices. Till next time.